Let's bring our guest on, adding him to the stream now. Scott, what's up, man? How's it going?
What's happening, guys? How are you?
Doing well. How about yourself?
Scott, thank you for coming on, man.
Yeah, my pleasure. It's been fun. I was on another one of your guys' streams last week. I had a great time.
Ah, okay. Now, what's your Twitter name?
Scott Melker, ScottMelker.
Okay, you guys can find him on Twitter, Scott Melker. What are you seeing in the market today? I like your background. What is that in the back right shoulder of yours? I can get to see your back right shoulder. Is that a basketball?
Yeah, back there is I'm a big Gator fan. I grew up in Gainesville, Florida. So the basketball is the 2008 championship team. Billy Donovan, Al Horford, Joakim Noah, etc. 2007 team.
Yeah, I was just going. Where was that played at in the Final Four?
It was 2 years. Atlanta was the first one. They won 2 years in a row, and I'm trying to remember where this.
Wait, so were you there? Were you there in Atlanta?
I was not only there actually, but I was the DJ for the Final Four that year. I was a DJ for about 20 years, hence the turntables over the other shoulder. But so I played 4 concerts at the Final Four over 4 days there.
Wait, was Michigan in the Final Four that year?
To be honest, I don't remember. I just know we won.
all I know
That's all that matters. That's all that matters.
Yeah, I think you guys. I think so. I was there in Atlanta. Florida was there, and that's why I have. When you said the Gators, Florida Final Four, my heart dropped a little bit because it's a bad. All right. But you were the DJ. You could have invited me to a party, man. Damn it.
How do you know? Hey, man, we could go back in time about 15 years, and maybe we can make it happen.
Yeah. Okay.
Well, maybe he'll DJ next year. Who knows?
You never know. I'm kind of retired, but you never know. Might have a moment.
Yeah. All right. So, want to talk stocks?
Sure. I'll talk about whatever you guys want.
The DJ.
What do you have in mind?
The DJ was pretty cool. So no, I mean, are you getting long? What do you think this market's a one-day rally? What do you think is going on? You think it's going to be back and forth? What do you think?
Talking about stocks specifically, crypto, forex. What are we talking? Stocks?
Go with that stocks first, and we'll go to it all. I love it. I love you.
They're not going to stop printing money, right?
Point.
Nope.
Yeah,
another 2 trillion coming.
So I think stocks will go up. I don't really try to overthink it. I'm not trying to fade the Fed. I'm not trying to stand in the way of a flood. I think that until proven otherwise, even though, listen, I think that the market should correct. I think that we should drop, but what should happen in confluence with the actual global economy and such has not really been of any consequence for the last year. So I think for now the numbers should go up.
And I imagine that this big stimulus deal is a positive catalyst for crypto in your eyes, right? Or what are your thoughts?
I think free money is always a good thing for markets. And we saw sort of a boost around this time last year when there was the first stimulus package. More, across the board, not specific to crypto, obviously, but you had this sort of confluence of people sitting at home with nothing to do, no sports to bet on, and a whole lot of free money coming into their pockets. So what are they going to do? They're going to follow Dave Portnoy and buy some stocks, especially of zombie bankrupt dead companies that have no business going up and should be going to zero. So, the markets can stay irrational longer than you can stay solvent. So I don't see why that would be any different moving forward.
Okay. On the crypto, now your Twitter name is Scott Melker, but he's the wolf of all streets. So he's, crypto, Bitcoin, Ethereum, everything. That's what you talk about. So I was reading some of your stuff about Ethereum, Bitcoin. Do you have a preference on the Ethereum side, Bitcoin side? Which one do you like better?
I'm one of the rare people in crypto who thinks it's totally fine to own both, and I believe that both will do exceptionally well. There's a lot of tribalism in crypto. Your audience may or may not know about that, but there's the very hardcore Bitcoin maximalists, and then on the flip side, there's very hardcore Ethereum maximalists, and obviously they conflict on a lot. Very often, but it's my opinion that both from a fundamental standpoint, they're exceptionally different. So there's no reason not to be bullish on both. But if we're looking for just the best trade right now, I would say that Ethereum has lagged. And so, it's my thinking that if you're looking at it strictly as a trade, that there's probably a bit more upside right now on Ethereum than on Bitcoin.
Yeah, I own Ethereum and Bitcoin, but my most recent purchase was Ethereum. Hasn't done a ton since I bought it. It was recently.
That's good. That's good.
Yeah. I mean, I don't know. I mean, I wasn't enough in crypto, and so I just made the move when Chamath wouldn't stop talking about it. I made the move.
Smart.
Yeah. Go ahead. Sorry.
Chamath always said to have 1%. I'm sure he's raised that number yet. Everybody who started at 1% went to 5, 10, 20, 25, and most of them are now talking about having 50% of your money in crypto. It's been somewhat of an interesting year in that regard. But yeah, I mean, listen, Ethereum has been proven, has a very strong use case. Everyone's building on it. I don't know if you guys are familiar with DeFi or decentralized finance, but that's kind of the future of crypto in a lot of people's eyes. And the majority of that is still being built on Ethereum. So I don't see why it wouldn't catch up. And if, obviously history never repeats itself, but it often rhymes. If you look back at 2017, Bitcoin topped, around 20,000. Ethereum was lagging hard. And then as Bitcoin dropped over the next month, Ethereum went absolutely bananas and hit its own all-time high at the tail end when Bitcoin calmed down. So could see something like that.
That's interesting. Now, I had a question. Look, I had a question. Don't cut me off yet. Look, I had a question. Oh yeah. So what percentage are you in crypto, I guess?
Funny. If you'd asked me at the end of 2019, I would have said 5% was my maximum, even as a believer. At the beginning of 2020, I would have told you 10%. Then COVID hit, changed my entire perspective on the monetary system and central banks and the nonsense that we've seen. And I just really haven't rebalanced, and it was an exceptional year. So at this point, I'm half-ish, around half.
Well, and when you're talking about the central banks and monetary policy, that's basically they're going to keep printing money. It's going to devalue, the USD or whatever currency we're talking about, and that's where crypto at the fixed supply is set to move higher. Is
sure.
that?
Yeah, I think that's definitely the surface and what most people would point to. I mean, inflation is robbing from future generations to pay the bills of today's, but that's certainly one of the biggest problems. But then you add to that, when talking about becoming disillusioned with the system, you add to that what stocks have done in the face of, what should have been or was an actual global economic crisis. You realize, obviously, that there's a systematic haves and have-nots in the United States and around the world, and that the few people who are fortunate enough to have their money in hard assets and stocks have done exceptionally well, while people who have to survive paycheck to paycheck on dollars have done exceptionally poorly. And so that bipolarity, I think, has stuck out to a lot of people in the last years. It's fun to talk about investments and stocks and storing value and all these things, but if you're just trying to pay for diapers, you don't give a, I'll say, about you can give a darn.
Don't worry.
You don't give a shit about about storing value, right? And every single day your dollar's losing buying power for those items you need while your salary continues to stagnate. So I just think that there's been somewhat a grand awakening that the system's broken, it's fixed, and that people need a hedge.
Okay.
Got it. How long have you been trading and investing for? I mean,
since the 1980s. I'm in my 40s, and I bought my first stocks like when I was 12 or 13 years old. Caterpillar, because I thought tractors were cool, and Disney because I thought Mickey Mouse was cool. I still have somewhere like my original first Disney share, and stock certificate, because back then obviously you didn't just pop onto E-Trade and make a trade. But I was a kind of crap trader for a couple decades and started to take it far more seriously in the last 10 years, really in the last 5, when I sort of retired from DJing and made a full-time transition to trading. And that's how crypto is like the grand trading mecca, where you could do 100x in a day. and so obviously I sort of gravitated towards that at the time, and then sort of backed into the actual importance of crypto as opposed to just an opportunity to trade and make a bunch of money.
What about Forex?
I've touched it. I find Forex confounding. The thing is, it's extremely high leverage, but that's fine, because to make those small movements matter, you obviously need to be at like 100x leverage for it to even be consequential. And it is the highest volume market, which obviously is attractive. But I find that, as fun as it is, I'm a technical trader generally. I just love to look at a chart and pretend that's actually going to tell me something, even though in my mind I know that's not. And Forex, you really have to be on top of global events, I think, to trade Forex effectively. And you need to have a really core understanding of the economies of the countries whose currencies you're trading, the interplay between those, what commodities they're buying and selling, or, their major imports and exports, and how that's going to affect also like non-farm payroll. You need to know when, the big events are going to happen. And you might not know that in Japan, they're having a huge meeting of their central bank or something that's going to affect the currency while you're sitting there looking at the chart and thinking everything's great. So if you've been through one or two news-based Forex crashes that you didn't see coming because you didn't really understand what you're trading, you kind of back off a bit, I think. So if I trade Forex, I generally stick to something that I understand, like the dollar-euro pair or something, and I try not to get too exotic anymore. I used to trade the peso, Mexican peso, quite a bit, but otherwise I've backed off. Crypto's too much fun.
You are the man of all streets here. I mean, well, like that's a good moniker. That's a good moniker, Scott Melker.
Well,
go ahead, please.
I was just going to ask about the crypto trading. Like, are there specific crypto pairs that you always trade because you know them well? Do you trade across everything? And if so, how do you decide what to trade, et cetera?
I'm a spaz. I trade it all. And they call us shitcoiners. Listen, I love Bitcoin. I used to trade it really aggressively with leverage and stuff. But then sort of, as I said, in the last year, Bitcoin's become too important to me to lose. So really I view Bitcoin as somewhat of a savings account. And I always joke that kind of dollars are for spending and Bitcoin is for saving. And so I've stopped, kind of because maybe I have an emotional attachment to it and I don't like to trade with any sort of emotion, or just because I believe in it, I've stopped really aggressively trading it. I'm an investor. I buy dips and I hold on for dear life and I wait. That said, everything else I trade aggressively with the goal of making more Bitcoin to do it.
There's so many currencies. So like, how do you decide which ones to trade? Is it when you start seeing moves, like some volatility, or I'm curious.
Like I write a daily newsletter about crypto and trades. I do live streams. I'm very much in this, and it's a 24/7 market. So when I'm not with my kids and my wife, I'm basically focused on this. So I'm very on top of it, and I generally go through. I probably have 4,000 charts in my trading view at this point. I set alarms all over charts. And when an alarm goes off on a chart at a level I'm interested in, then I bother to open that chart again and see if there's something that I want to trade. So it really is like, I'll take maybe an hour on a random day and I'll just go through 100 charts and just bang them out. I want this level, this level, this level. And then I close them, because if you're going to sit there and stare at it doing nothing, you're just going to make a bad decision.
Yep. I've definitely been there before where I'm almost like bored. Right. And I'm just looking and it's like, all right, I want some action on something. I'm just going to hit it. And exactly.
Exactly.
Setup comes to me. It's
I try really hard in my old age to avoid doing that. I used to do it, but that's obviously, boredom is the worst reason to trade. And the Vegas mentality. Well, I guess it's just be said, at least in Vegas, you get free drinks when you're losing your money, and you don't get that here. So, I used to be aggressive day trader. I've gone through really long swing trading and scalping. I've done it all at this point. My trades are very slow developing. It fits my lifestyle better. I don't want to be, face down in a screen 24 hours a day. And that really is the difference with crypto. It's 24 hours a day, also through the weekend. You cannot, you could theoretically never stop. You could be buried face down, finding trades every second.
Okay. All right. Go ahead, Jason.
No, I was just like, I would actually love, Scott, I don't know if you'd ever be comfortable, but I would love if you would show your screen. I know it's probably hard because your portfolio, but the way you look at the markets are so wide and varied. It'd be so cool to be like a fly on the wall in the room of your trading, or at least hearing some of that stuff for like a little bit versus just us talking to you and asking you questions.
I can zip through a Bitcoin chart really quick.
Yeah, let's do it.
Let's do it.
1 second. Okay. Give me 2 seconds to pull it up. I wasn't expecting it. So,
I'm just like, I've just been listening to you talk and taking it in, because I'm very myopic in my focus, that I'm focused on equities, and I just do a little crypto, but I don't think really outside equities.
Cool. You can pull it up. I've got a Bitcoin chart pulled up.
All right. Let me add it onto the stream here.
I got it, Luke.
You got it? All right.
Yeah. So I always tell everyone that I trade with or who follows me that, when in doubt, zoom out. So this is the Bitcoin monthly chart. As you can see, it's sort of in this macro ascending channel, which is, it's a huge trend going back to 2013. We actually saw something very similar with the dollar DXY, which broke down a few months ago after being in this similar channel since 2010, basically. But if you're a channel trader, and most technical analysts believe that price likes to travel in channels, you have this support here, support here, support here. So you had this very, very perfect clean bounce off support. This is as bottomy of a bottom as you can get, and this is March 12th. Right, last year when everything crashed. And you can see that if you're a technical trader, that literally hit to the dollar exactly where you would have expected to. And when you see a catch of support like that, you're looking for a move to the EQ of that ascending channel, which is this dash line, the equilibrium. It's the 50% level between. You'll see that the 50% levels on any chart, you pull up these channels, up, down, sideways, doesn't matter. You find interaction there, right? So look, like support here, this is where it broke down. When it came up, resistance for 3 months, then finally broke, came back, tested it. When it finally broke again, tested it. You're right. So clearly what matters here is that we flipped it in December and now we're moving away from it. And this is when you start having people talk about $150,000, $100,000, $200,000 targets. Well, if you're in a range, if you're in a channel like this and you're on the top half, you should visit the top. And really, I mean, getting to, six-figure Bitcoin from here is a 2x. We were at 3,800 right here, right? I mean, 13, 14, 15 times it did in a year. If you got to think in relative terms, not in terms of numbers. Yeah, it's hard to imagine it going up 50 grand. It's not hard to imagine it doubling. I don't know. I haven't even looked at this, but let's zoom in on the weekly. This is, it's got probably stuff all over it. As I said, I wasn't kind of ready here. I would say that here was your line. Really simple. This is where, trying to get my magnet on, this is where it topped at 42,000. Then it took a couple weeks. As you can see, each one of these candles is a week. 1, 2, 3, 4, 5 weeks to break. And this is your Tesla news right here.
Oh, wow.
When Tesla bought.
Wow.
And look, we had this retrace. Everybody's panicking. Everybody's going nuts yesterday. Bitcoin's dead. It's going to zero. It's over. And actually what was really happening was that price was coming back down to test this very obvious area. And as always happens, somebody with a lot of money front runs that area and heads you up. If everyone's watching a line, you never get it, right? Price bounces right above it. Daily, you can see kind of the same thing. If you want to look at candle structure, see that this is why I'm generally bullish and think we're bouncing. You have this sort of hammer right here. It's a Japanese candlestick, small body, long wick down. That's usually a sign of reversal that bulls were able to push back through the session, leaving all these long wicks down show a lot of demand and buying. I don't even know what we're going to find if we go in deeper. Tell you right now, just by looking at it, eyeballing it, this is what I do all day, guys.
So are these monthly candles again, or what?
No, I was going in. So it was monthly, then we looked at weekly, then daily, and now this is 4 hour, right? So this is the trend, 58,000. This is the dip that we just saw. And you have a bullish descending wedge pattern that should break to the top. You can see broke to the upside. So, we're seeing a little retracement here. And if you're a horizontal trader, you would quickly eyeball this whole area right through here as support. Right? All these candles hit it, popped up. So I would say this comes down here. If you're a dip buyer, you buy in this area and expect to be heading right back up to roughly 58,000. That's the gist. So that's what I'm doing all day. Just banging through the charts, starting on large time frames, going down to lower time frames. I have 100 different techniques I use. I've been through all of them. But at the end of the day, I view it as a risk management tool. I don't think it's something that's going to show us what's going to happen in the future. It's not a crystal ball. The only reason this matters, I might be completely wrong, but if I'm looking at this chart right here and I buy here, I know that I want to put my stop loss right here because then I'm wrong, right? And so all I care about, the only reason you look at a chart, people who think that they're going to tell the future with it, whatever. So let's say this is my stop loss and this is my target. Right here, 58,000 being the target. My stop loss would be right around here. Well, this has a risk reward ratio of 13.09. Basically take that trade 13 times and be wrong 12 and still break even, right? So it's all about cutting your losers really small. Like you would see here, this would be a tiny loss. So you figure out your stop loss, then you back calculate your position size based on the size of your portfolio and the percentage you're willing to lose. Let's say you want to lose 1% on no more than 1% of your portfolio on a given trade. Well, if you have the balls to hold it up to here, if it keeps going and you don't stop out, lose small, win big, you can lose 12 out of 13 times and not lose money. That's it.
All
That's
right,
what
Jason,
trading
does
is.
that impress you?
Yes, I have no words. Like I don't do it like it reminds me of my flag football, I guess, Luke, because how deep he goes and you know what I mean? It's like everyone has their methods. His method is like I would have to be there for weeks to learn it, you know, to understand it, feel it.
But you know, it doesn't matter what method you use. You can like sacrifice baby unicorns to the trade gods to get your entries. As long as you don't lose a lot on a trade, that's all that matters.
Cool.
It's literally about letting winners run and cutting losers short. It's all that really matters in trading. It's the emotional discipline and risk management. The rest of it, you know, you can do a deep fundamental analysis. There's people who trade on-chain, you know, metrics, how many coins are moving from wallet, what the big wallets are doing. There's a million ways to trade crypto. Doesn't matter. Don't lose a lot on a trade.
I love it. I love it. That's great. And again, Scott, can you drop us the social channels or the newsletter, or how do people keep following along with you? We're getting some very, very positive comments in the chat. I was smiling ear to ear. Jason was speechless. So how do people stay in touch?
At Scott Melker, ScottMelker. Everything is there in my description. You can also check out the wolfofallstreets.io. I have a podcast that's twice a week, which is like my favorite activity in my life. I basically get to call people who would have never given me the time
Other
of
than
day.
your family, but yeah.
Yeah, well, I like that too. But, you know, so you get to call someone a couple times a week who would have never probably talked to you, and they'll spend an hour answering all your questions just because they want to be on a podcast. So I love that. I have the newsletter, and I do a lot of this on YouTube as well. I do live streams and updates, you know. But you can find it all at the website or on my Twitter. Luke just turned into a spinning
thing. Yeah, I don't know. They kicked him out. Luke got kicked
look better.
out.
It's good. He got more handsome.
Yeah, this is definitely a better look for Luke. His computer died. That's what it was. You know, I guess he didn't monitor that percentage computer thing. We'll have to work on that. So, well, Scott, thank you for coming on. I know you're a popular man. Appreciate it. Thank you for imparting some of your education. Hopefully you'll do it in the future too.
Anytime, literally. Just let me know.
All right, man. Thank you again.
Thanks,
appreciate
guys.
it. Yep. Bye-bye.
Bye-bye.